Frank says, regarding banking, best way to have an employee's gross salary sent to trust account free and clear? Question mark. Can you give a real example of it being done? I've heard of it being done. I'm not an employee, W-2 employee, in that system. My person is not an employee, probably ever again. So I don't utilize that technology. But the best way to have an employee's salary sent to trust account free and clear is to claim an exemption and then so there's no tax withholding, and then have your trust send them notice of withholding, no notice of interest, and we talked about that earlier.
Yeah, if it was by lien right, it would be, but at the same time, it's still net income. So ultimately, when contracting with an organization, if you're under a contract that stipulates that you have to have a W-2 or W-4, or stipulates that they're withholding any taxes from you, you're effectively not going to do that regardless. You're not going to get anything close. But if you're contracting privately, well, hell, I've worked under the table before. So there's that. Right?
No, shame on you.
It was only for $10. Everybody works under.
Hey, at least that made it 10 instead of 7.
There you go. So the fact is that in the beginning of contracting with them, what you're basically asking is you're asking a chartered corporation to cheat on its taxes. You're asking a chartered corporation to not tax you in its paying out of its income to ensure that it can maintain its deductions to.
Oh, no. No. Wait a minute. You're asking. Okay. You're not asking a chartered corporation to cheat on its taxes. What do you mean?
What he's saying is he's asking this. He's asking, how do we get to contract with a charter to get gross funds from employment? Gross funds from employment.
Okay, and the answer is it has nothing to do with the corporation that you're working for, or the company that you're working for, or whatever. It has nothing to do with them. They're going to operate on instructions. They have instructions from the IRS to withhold. They have instructions from you to not withhold. They have instructions from the trust to pay everything to the trust. Okay, so what are they going to do? Well, they're going to do it by the law, which says that they have to collect all the paperwork from all the parties and do the right thing. It's got nothing to do with them. They're not cheating on their taxes. They're performing in accordance with the law of contract in the paperwork provided. Okay, so if you can support that you're tax exempt, which is the only way you're going to get gross, okay, then go ahead and do your tax exemption on your person. Okay, and then if the trust has a legitimate claim by private party contract to the income of that person, to that corporation that public ends legis's income rather, then the trust can submit that claim and instruct the employer to send the check to them. And the IRS is in the same boat. They're just asserting a claim, and so if they believe that they should be getting some of that money, then they'll have to step up. But the fact is that they rely on your person to opt into their voluntary tax system, and if your person opts out, that's between the person and the IRS. It's not a matter of asking your employer to cheat in any way.
I apologize. I was making the statement from a different impression, but I understand exactly what you're saying. You're not effectively asking them to cheat, so to speak. But I'm under the presumption that most all individuals looking to attempt to become exempt are not officially exempt and would have difficulty proving beyond a reasonable doubt that they are exempt. And under that circumstance, any corporation withholding taxes is going to have to withhold those taxes, whether it's employing a trust or any other entity, and that entity is going to have to report in some way.
Okay, well, all of the issue of exemption falls on the public side.
Yeah.
Okay, just to be totally clear, that is IRC, IRM. It is code and and operating procedures of the IRS. That's a lot of IR something soup letters, but that stuff is public side stuff. It has to do with stuff that is outside of our realm of of
you got a really
discussion
good
here,
point.
really.
And I'll make a distinction right now on that. What we're talking about is tax non-obligation, not tax exemption.
What you're talking about is tax non-obligation?
What we're talking about in this course
Oh, well, yeah,
has
there's
nothing to do with tax exemption. It has everything to do with tax non-obligation, because
right.
there is such a difference as income and taxable.
And you're right, and that's a really good point, and it also corrects what I just said. Even on that other side, which is not we're not looking at that. Okay, we're looking at things from the trust side. But if you're looking at from the individual, the individual's person side, okay, the person who's a W-2 employee or a 1099 recipient, those persons are public and would have to apply for tax exemption. The individuals that are operating those persons, okay, could approach it on the tax exemption side, which would be the public route through the IRS, or could make a claim for tax non-obligation on the private side. But in either case, that is having to do with the individual and its person, not the trust. The trust can only get from the employer whatever is left over from whatever the person has figured out with the IRS and Social Security and everything else.
That's the best way to say that right there. They can only get what's left over.
And if there's a tax lien or a child support or alimony or a judgment or any of those things, they're most likely going to take precedence over the trust's interest.
That would be determined by, I think, the priority interest of lien.
It would, and the type of lien.
Yes.
And there are ways to get a priority interest in a higher form of lien, and for the trust to take superiority and the role on that. But by default in a standard request, the company is going to be advised by its lawyers or whatever that it's probably to pay the government first.
Yeah.
So.
And I'm sure the government will tell it the same thing.
Right, and the government would be happy to tell them the same thing, right? So, in practice, it's going to be hard to get ahead of those things. And in fact, you can't avoid debts. See, the thing is, you can't avoid debts by trust anyway. Like, you couldn't pay your income into trust to avoid paying creditors. That's fraudulent transfer.
But once again, paying one creditor instead of all of them is not a fraudulent transfer.
Yeah, exactly.
It's a first in line, first in time lien that you were paying against. Sorry to sound like Jack.
No, that's so key. It's one creditor versus another. You got to set things up. Your security instrument and lien have to be such that there's legitimate interest for you to get paid, for the trust to get paid in first person, first position.
There's your remedy.
Yeah, thanks, Jack. Okay, moving along.